Good morning, everybody. How are you doing? Sorry for the late start. We're beginning the live show. Okay, so please refresh your browsers or whatever you need to do. I'm very sorry for the late start. We had some issues for those coming for the first time to the show. First of all, I apologize. We do start on time every morning. Starting almost 20 minutes late is not something that happens. I don't know exactly what the problem was, but after restarting the computer, everything is solved. So good morning, everybody. Again, sorry for the late start. This is the live market open for April 7th. It's Thursday. Okay. So, and yeah, I'll continue the show. We'll do the usual more or less 45 minutes. So we'll finish a bit later today, okay? Because the late start, again, I apologize. Anyway, it's Thursday, April 7th. I'm Yohay, I'm for Expansion Market Movers podcast, for those who don't know me, doing the show as usual for FX Street. So we'll talk about recent developments in markets, charts and levels the next 24 hours, and of course, your questions. So even though we started late, we'll still, of course, have time for your questions. That's the most important part. If you cannot see the chat box, if you're only watching the video, please go to the chat on this page, tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Well, basically, sell the dollar now, ask questions later. Total sell-off of the greenback began before the Fed minutes, continued afterwards. In addition, nobody's really afraid of the Bank of Japan, not the ECB, not anybody, okay? Let's just talk quickly about what happened yesterday. We had very few events. Oil inventories showed a drawdown, which strengthened the price of oil, even though it was not unexpected. Oil prices went up. The big event of the day was the Fed meeting minutes. Okay, remember we had what was going on in markets was on March 16th. These are the meeting minutes from March 16th. We had a dovish statement from the Fed, the dollar fell. Then we had hawkish statements from a few of Yellen's colleagues, the dollar strengthened. Then Yellen spoke again and killed the dollar last week. We saw some attempts to recover, but today, yesterday, towards the publication of the Fed minutes, it didn't help. The dollar resumed its falls. What actually came out in the minutes, which didn't stop the falls, and they resumed, of course, later on. We had generally dovish stuff. We know now that not only Esther George, but also another hawk, maybe Loretta Mester, maybe someone else, voted for a rate hike in March, okay? Yeah, so that should have been bullish, okay? That should have been hawkish. But they don't have any rush. Most Fed members do want to wait. They are acknowledging the improvement in the US economy, not really worried about what's going on at home. Even inflation took sort of a back seat in comparison to previous statements. But what took the front seat, what stood out, is the dovish worries about the world. They're very, very worried. They do not acknowledge all the steps that China took, or the ECB, or the Bank of Japan, or other emerging economies. They're really, really worried, okay? I mean, that's what they say. So this was dovish. It was maybe slightly hawkish with the two who wanted a hike, but not, basically not enough. The market paused for a bit. So the US dollar did rise just a bit in reaction to the minutes, but it was more sort of a dead cat bounce. Yeah, we did hear overnight from this morning from Peter Pratt of the ECB. There's an ECB conference going on, that measures could be calibrated, or in simpler words, that the ECB could do more. Doesn't seem to stop the euro. Also during the night, Kuroda, the governor of the Bank of Japan, said that the Bank of Japan could do more and could add more stimulus. But markets are basically calling Kuroda's bluff. And just let's look at the charts. Let's start with dollar yen. This is, we talked about 111 as being a line in the sand that was broken. We had a dip under this line 2 days ago on Tuesday, and then we had some kind of a recovery. But yesterday the pair fell once again under 110, and during the Asian session, it's a clear trend. Okay, this is hardly even a dead cat bounce, and this is quite a spectacular crash. Yeah, almost 1% only today. Currently at 108.78, the low has been 108.64. I'm not sure that's it's going to be the low for a long time. Anyway, where the levels last seen, yeah, the same time in October of 2014. Let me remind you that then the Bank of Japan did have more influence on markets, did manage to surprise everybody with the second round of QE, and the yen crashed. Dollar yen then made the big leap above 110, and in a matter of a few months or so, it already reached 120. Okay, and since then it's been trading on high ground. So we're reversing a move that began a year and a half ago. Okay, at the end of October 2010. A question here: why would anybody in his own right mind own negative rates currencies when risk sentiment is up? Well, it's still a safe haven. These currencies, it's still for some investors better than trading stocks. Some portfolio managers are just obliged to buy negative rates currencies, negative rates bonds. Okay, so risk sentiment is up and down. It's not very stable. Okay, so it's still something, you know, that the Japanese government will pay you back, even though Japan's public debt is way above 200% to GDP, but these are still considered safe haven bonds. At some point, with the negative rate, it'll be safer and just keeping the cash, okay, under the mattress. But at this point, keeping the money in the bank still has advantages. Anyway, with dollar yen, were the lows last seen in October of 2014. This is the big story of the day. Euro dollar, I think it's beginning here. The ECB does have some power. Okay, so we heard these comments from Peter Pratt. Let me see if I can pick up more comments. But anyway, we reached a high of 114.54, just under that 114.60 line I mentioned. Okay, which was the post. Why doesn't that appear? Yeah. Let me add this line. Well, too many lines here, I know, but anyway, this is the post QE high, the big recovery of the euro in the middle of 2015. This line was touched again, and it's also 1,000 pips above the multi-decade low. Okay. Did Kuroda and Draghi read the same book, How to Weaken Your Currency for Dummies? They wrote the book. They both had more success with this in the past. At least now, I think Draghi has a bit more success. The markets are absolutely calling the bluff of the ECB. Sorry, the Bank of Japan. Okay, more headlines from this conference of the ECB. Oh no, it's Constancio talking to the European Parliament. He said they will do whatever is required to pursue the price stability objective. So the ECB, the European Central Bank, is clearly raising the rhetoric this morning and not happy with the strength of the euro. Okay. Regular fiscal policy. Oh yeah, and they're also beating the same drum, which I think is correct, that governments should do more. Okay. Bigger words came from Peter Pratt that said you could recalibrate monetary policy. Okay. So I think he's speaking in Lisbon. Anyway, the ECB is managing, at least for now, yeah, a lot of lines on that chart. When we move to the hourly chart, you can see it's already becoming a bit of modern art. Anyway, we are seeing euro-dollar retreat from the highs. 114.10 is some kind of support because it kept the pair. 113.35 is much stronger support. 114.16, 115 are higher lines. Okay. The Swiss Re is not parking with negative rates and has been buying gold. So far, they have about 400 ounces parked. Okay. I didn't know that. It's a big company, insurance company, right? Anyway, they're buying gold. Perhaps that also supports the price of gold, although it's mostly speculation and not buying of real physical metal. Anyway, euro dollar is reacting just a bit, okay, to these movements. Pound dollar, the pound has been the weakest link. Also this morning it doesn't look so good. It is falling, but yesterday with this huge weakness of the dollar, and also before and after the Fed minutes, it did manage to bounce from the lows. And these were lows. It broke under this triple bottom, if you wish, or at least double bottom of 140.50. Well, one support, resistance, more or less support, support, support. Now it made a move under this line, okay, but it did bounce because this race to the bottom between the pound and the US dollar, we had a bounce. Remember, the pound has a lot of troubles. That the steel crisis, Brexit fears, and the Panama Papers implicating David Cameron all have political weight, all mean trouble for the British government, and this will continue for at least 2 more months until we have 2.5 months until we have the results of the referendum. Anyway, at the moment, there's a lot of pressure on the pound, so the pound is not a winner here. But at least against the US dollar, it did not fall under 140. It did manage to survive the second test. Okay, dollar yen, we talked about that. Dollar CAD, taking advantage also of this weakness of the US dollar, went back to the previous range of 130 to 130.80. Okay. It also enjoys, of course, higher oil prices. Oil is a bit high on the day. Already traded above $38 in WTI crude oil. Anyway, the Canadian dollar enjoyed also the inventory data and, of course, the weakness of the greenback. So we didn't have a fall under 130, but we're one range lower on dollar CAD. Aussie dollar, well, it did recover, it did take advantage of this weakness of the US dollar. So it did bounce from the lows. The risk-off sentiment sort of faded away. It did not manage to break above 76.40 here. Okay, so this is in this relatively choppy chart, we're seeing the Aussie dollar behave in a better manner. Now it's sliding once again this morning, but not all in all, did take advantage of the US dollar's weakness. Kiwi dollar is doing better. Well, it did manage to battle its way above the 68.20 line, which worked as a separator of ranges. It never went too far. It's basically crisscrossed this line. Next resistance 68.80. This week we had a better than expected. Well, we had a rise in milk prices, which was Kiwi positive in general. And Kiwi is showing us some strength, some resilience, and not fading away. Dollar Swiss. This certainly reflects the weakness of the US dollar and also the strength of the euro against the US dollar, basically a mirror image. So we did have a fall to 95.20. Now we're at 95.40, sort of battling what was previously support, stronger support. Yeah, I guess 95 a rounder number, and 96.40 as resistance. But Swiss franc basically mirroring dollar Swiss mirroring euro dollar. Here we're seeing basically not much change on the day on euro Swiss, less than 20 pips. It's a bit on lower ground, but it's hugging the 109 level, and beforehand it was above 109. Basically no movements here. I can't say I see any, or I haven't heard of any direct intervention by the BOJ, sorry, by the SNB, by the Swiss National Bank. But what's going on here is some kind of, these currencies are fading very closely together. Euro pound, here we see the strength of the euro, relative strength of the euro against the weakness of the pound, a race to the bottom between the pound and the dollar. And the euro is not in this game. And we're seeing even higher ground, 81 cents for people making their living here in Barcelona, making their money in pounds. It's not so good, and I know quite a few of those. So Anyway, 88.08 is the current level. 81.10, quite a significant rise. Let's try to add lines to this chart to see what's next. Oh, I already have old lines here. So the next line is 81.50 and then 82.20. These worked in the past around the beginning of 2014. So we're now in pound at levels last seen, well, in the middle of 2014, almost 2 years at these levels. Quite a big, when we talk about the pound's weakness, it's not only against, it's reflected better against the euro and also against the yen. Let's jump to dollar yen. Big breakout under 154.60. Okay. Sorry, yeah, 154.60 was support for the pair right here. Okay, right here in the end, towards the end of February. Since then, we had quite a rally. Now it's back down. We did have a battle with this line. It did work as support, but only for a few hours, 154.60. And boom, now we're basically scratching the bottom of the barrel just as we speak, falling under 153. Let's zoom out to the daily chart and see that with pound yen, we're at the lowest levels since August 2003. Okay, so this is also quite a big fall for the pair. Should do some spring cleaning on these charts. Anyway, very, very strong support there, just at 147.70, and perhaps some support at right here, 151.80. Okay. Anyway, big crash. Euro yen, here we're seeing the strength of the Japanese yen. Okay. The pair isn't any big breakout, but it is certainly lower. Okay, well, nearly 1% on the day, losing 124. The next support line is 123. And oil, well, did recover on these better inventories. We had a first hint from the API figure on Tuesday night, and then yesterday, Wednesday afternoon, we had the crude oil inventories. Now we're back to these levels between 37.60 and 80 and 38.30. Okay. Anyway, sort of a recovery of sorts for oil prices. All right. I see here a few questions. Wouldn't Brexit be worse for the euro than the pound? That's a good question. I think you have a good point there because, well, in terms of trade, the Eurozone or the EU in general, the other 27 countries in the EU, or if you count only the 19 countries in the Eurozone, are bigger together, are bigger economy. It's a bigger economy than the British one. Okay, and regarding trade, the UK is smaller, and the EU also has agreements with other places. So the UK would lose more than the Eurozone. However, this is also a huge political event. Okay, even if the UK reaches a new deal with the outside the EU, which is certainly possible, and this deal could be good, the actual departure of such a big and important country in the global scene, the world's 6th largest or 7th largest economy, from this body, sort of the European Union is going all the time towards integration. When such a big and important country, even though it doesn't participate in many things, not in Schengen, not in the euro, and opts out of other stuff, but the fact that it's one country leaving, I think, for the first time and not joining, this has huge political implications. This could be the beginning of the end of the European Union. It shows the lack of integration, okay, and it could be, in the long run, more damaging. More questions here. Well, we have a chart here. Let me... For those of you joining now, sorry again for the late start. We will continue to a later hour. Okay, thanks for this chart. So 3 drive divergence on the hourly. Yeah, okay, so it's a nice trend there. Yeah, the euro dollar took its time in consolidation, and now it's moving to the upside. I'm sure many people don't like it, and we'll see. Draghi speaks later on. Okay, well, thank you very much, Jim, for the chart. Lucas says, confused market pricing and 0 hikes this year. Minute said fairly clearly the very high chance of June hike. So later market will have to reprice unless they just don't believe a word they say any longer. Yeah, no, I'm not hungover. The computer perhaps was hungover. Anyway, referring to your question regarding the hikes in the Federal Reserve, well, as we speak, euro dollar is sliding even further. Let's see if we have. I'll answer your question shortly. Just I'll try to catch a few headlines because I see here a significant fall. No, nothing new, but looks like the US dollar is trying to claw back at least against the euro, which is now flat on the day, and against the pound, we're seeing a resumption of the fall. Even against the yen, it's against the yen, it's not even a dead cat bounce. But yeah, so the US dollar is looking a bit better as we speak this morning, but not so much. So you were asking about hikes. Yeah, you could interpret what we've seen yesterday. That I mean, I'll put on my hawkish cap for a second. You could say the Fed in March decided not to act too, did want to hike, but they did have a big debate about hiking in April. Okay, and if they were talking about hiking in April, that could give us a hint that they will act in June. But the level of the worries about the global economy, the fact that the vast majority still with Yellen, with other doves, I mean, most of them are doves and do not want to hike, that stood out. Okay, so if you look at, I'll show you in a second, what's priced in bond markets, we didn't see any real change. Okay, there's still a chance of a hike in June. All right, I don't rule that out. We'll need to see a few things. We'll need to see better than expected figures. We have in April the first release of GDP growth for the first quarter. Expectations are for it to be low. The Fed will have it one day before us. So maybe that will be okay. And then we'll have developments in early May and early June, especially non-farm payrolls. So there is a chance. I still believe there is a chance, okay? Once they're a bit less worried about the global economy. But at the moment, for the shorter term, markets just don't believe, still think, yes, the Fed is over optimistic, and also, well, not so sure about the US economy, okay? Growth looked a bit better in Q4, but looks a bit worse in Q1. Very mediocre, very frustrating growth. I don't think in general it's a really bad thing. Slower growth means a lower chance of a bubble that ends up with a big bust, okay? But anyway, that's situation right here. Okay. Yeah, Senator tells Jim, dollar index showing a strong bullish candle on the hourly chart, supports your look. Okay, yeah, I'll just remind, thanks also Senator for sharing the chart. I would add that the US dollar index is a relatively, I mean, not so updated instrument. I mean, you can trade it, of course, in the sense that it reflects a lot of, most of it is just the euro, okay? It was composed when, before the big boom of the Asian economies, and it consisted originally of many European currencies, and now it's European economies, and now it's, well, just mostly the euro. That's why you see this kind of connection, okay? All right, so thanks for that. Anyway, interesting charts. Yeah, Sinatra, methinks people are starting to take a second look at the minutes. Yeah, again, you can look at the minutes as they could still say in April, listen, like they did in October, if you remember. In October, the Fed told us that towards the next meeting, hint, hint, wink, wink, we're going to consider this and that and that and this. That was telling us we're going to move, okay? So we might get that in April. I also think that economic situation in the US is okay. The global economy also is not really crashing. I mean, there's bad stuff going on, but not all is lost, okay? Anyway, for the Japanese yen, nothing seems to matter, okay? Japanese yen is just defying the Bank of Japan, the Ministry of Finance in Tokyo, just going on. Okay, more questions. Comment here by Ed. You voice. I voiced why no Brexit, but derivatives exposure for all hidden unknown Brexit. Low probability. Ask an expert can never explain what derivatives is certainly possible volume. Don't forget Germany's Deutsche Bank has a derivative exposure bigger than US debt. Around who and how was valued unknown, probably huge. So think. Yeah, well, I'm not aware of this derivative story. I'll just say that, yeah, there is, I mean, all these derivatives, all this extreme betting, gambling, and was part of what caused the big financial crisis, the GFC, the Great Financial Crisis. Specifically, I also think Brits will remain with the devil they know, the EU, and hopefully try to change it from within, then leave, although there are, of course, reasons for both sides. We've heard in the G20 that many agreed that Brexit is a danger to the global economy. So it turned from the Tory party trying to keep UKIP on the sidelines from an internal and right-wing Tories inside, and turned from an internal political issue in the UK into a global issue. Anyway, yeah. I also think they'll say what the devil they know, but you never know. There are many high-ranking conservatives campaigning for Brexit. Okay. Anyway, Jake says, you're now chasing the pound and race to the downside. JPY intervention soon. We could have an intervention by the Bank of Japan, but now they're trying, they would be smarter, I think, to intervene after the yen stabilizes, okay? If they try to intervene now, it'll be like catching a falling knife. I'm sure you've heard this expression. It can only damage the reputation. There's sort of this one-sided move. Of course, they could intervene. Of course, there could be a bounce just by profit-taking, stop-loss hunting, you name it, okay? So I think they would rather intervene after the big fall, after some stability, and then they'll help push it back up again. I'm talking about dollar yen. So far, they've been defied in the past few months so many times by markets, so maybe they should let it go, at least for now. We are seeing some profit taking on the sell-off of the US dollar, maybe rethinking of the minutes, maybe just natural profit taking. Remember, we're still on very low ground for the dollar against the euro, especially against the yen. For the pound, yeah, currently holding on to 140.50, the line, the triple bottom that it broke under yesterday. Anyway, another question here. If Brexit happens, would dollar yen be the number one pair, or would China try to step up in and fill the void? Number one pair in terms of trading? I think euro dollar will still remain number one pair. Dollar yen will remain number two. Okay, we would need a breakup of the eurozone in order for something like that. Anyway, dollar yen in terms of immediate, I mean, where's the trade? Under Brexit, yeah, buying the yen would be a good trade because it's still the safe haven currency. and the euro could suffer more. Okay. Another chart here by Luca, bullish divergence building intraday in euro pound. Okay, thanks for sharing, Luca. So the bottom chart. Yeah, perhaps this is what we're seeing now at the moment. Anyway, euro yen fell quite a lot. The yen is now the king of the hill. Okay. And another chart here from Jake, was short from last night on this. Yeah, let's share it on the screen as well. Ooh, that's a nice short. Yeah, he made some profit here. Yeah, sell at PB zone. Odd yen. Yeah, the yen is a risk currency. Yeah, that's quite a chart. Thanks, Jake. The yen, yeah, made some nice profit there. Looks like quite a nice chart. We often overlook crosses. I mean, I always talk about the major ones, but don't focus on other ones. But Aussie against the yen, a classic risk on, risk off trade. Yeah, had quite a spectacular crash yesterday. Mostly just the strength of the yen. Yeah, it's a fundamental reason. Yeah, that's a lot of sushi. Yeah, some good tasting. I know the Australians like sushi, so yeah, now it'll cost them a bit more if they go to Japan. That means that is. So yeah, thanks for sharing. Thanks everybody for sharing all the great charts. You can of course learn from each other. Okay, so I answered a lot of questions, talked about what happened yesterday. Let's talk about the events for today. Oh, this is before that. I wanted to show you this. Remember yesterday we talked about 80% chance against a rate hike in June. Now it's around 82. Okay, we went from 80.3 right here to 82.1. Okay, so basically the market says, the Fed is dovish, or even if it isn't really dovish, we don't believe them, and yeah. Again, a rate hike is priced in only for December. November, that's the week of the general elections, the presidential elections. Still no chance, of course, in December. 50%, a bit more, 57% for a hike, okay? But even for September, which is a press conference, well, too close to the elections, 60% against the rate hike. More comments here. Took almost the same losses against the NZD and the US dollar. Okay, so the Australian dollar was also weak. Let's just take a look at that. For instance, Aussie against NZD, yeah, a bit lower. Well, it climbed up the stairs and fell down the elevator. I think that would be the expression for what's going on this morning. Yeah. All right, let's talk about events for today. As we speak, euro dollar is above 114. So today we have on the agenda, well, light European morning at 12:30 GMT. I was talking about this last week, but it was wrong on the calendar. So it comes out today, the ECB meeting minutes. As always, they take their sweet, sweet time and release it 1 month after the event. It's not so relevant. Remember that in that ECB meeting in March, it was a very dramatic meeting. March 10th, we had the ECB beat their own expectations. They announced an enlargement of QE from 60 to 80 billion, more euro printing. They cut rates. They cut the negative deposit rate from -30 to -40, and they surprised by cutting the lending rate from 0.05 to a flat 0. they announced 40 LTROs. That means new programs of lending money to banks in order for banks to lend this money to the real economy. And at current interest rates, it means they actually pay banks to lend money out. Okay, so, and what else? They're now buying also corporate bonds and the works. They threw the kitchen sink. However, Draghi said that they're sort of done for now, and that allowed the bounce. It was that triple bottom or double bottom at 108.20, and boom, we shot higher. Okay, it was another disappointment for Draghi. So now we'll have the meeting minutes from this. We know that the German Bundesbank, led by Jens Weidmann, they supported more measures, but not so far, not going that far. So we'll see how divided the ECB is, what their views are on inflation. We heard from Peter Pratt of the ECB that if they had not acted as they had acted in 2015, the Eurozone would have been in deep deflation. Let's see if these minutes reflect any hint of future action or not. Okay, it isn't such a big market mover usually, but it can surprise. Okay, 12:30 GMT, we have US jobless claims, and that's expected. That's like every week. Last time was slightly disappointing, and this time it's expected to remain, well, to slide a bit from 276 to 270. And at the same time, we have building permits in Canada, not a big market mover. At some point later on, around 1 GMT, 1:30, 2:30. We don't have the exact hour, okay? Sorry for that, but I looked also in other calendars and other resources. We don't have the exact timing of of Draghi's speech, but it's an important one. It's the ECB conference. We already heard from his colleagues. They were sort of the warm-up for the big show, the Draghi show. Let's see what he says about inflation, about the global economy, about growth. I'm sure he will tell governments to do more, perhaps up the rhetoric. It was always telling, the ECB was always telling governments to do more structural reforms. Everybody can agree that less red tape is good for everybody. But recently, he also said things that are more politically charged. Guys, open up your pockets, especially Germany, and start spending. Okay, in a more, not in these words, in more gentle words, but I think he'll maybe today up the ante a bit more. And let's see if he talks about further action on from the ECB. But the ECB has really done a lot. At 8 GMT, we have US consumer credit, worth noting. But for those of you that are up at night, there's a conference of four Fed chairs. Okay, Janet Yellen, the one that her predecessor Ben Bernanke, the one before him Alan Greenspan, was nearly 20 years in office, and even the one before him Paul Volcker. Okay, the one with the picture of the cigar that hit inflation on its head and triggered a recession in the early 80s. So anyway, of course, the current chair is the most important speaker there, and she'll speak at 9:30. Let's see if she goes dovish once again. Remember, she spoke quite a few times recently, so maybe her words will not be as important as Draghi's words today. Anyway, Euro-dollar is the pair to watch. That speech is scheduled for 9:30 GMT. What happens usually is that this is a very liquid hour in markets, okay? Anyway, she will be speaking, her speech will be released as she begins speaking, so we'll have all the headlines flashing. At that time, a time of low liquidity after the United States closes and just before Tokyo opens, okay? And then we have the Japanese current account, which did have some impact. Let's see if it's negative. And a speech by Esther George. She's the hawk, the sole person, the sole voter that voted for rate hike in March. Now it's after the Fed's meeting minutes. Let's see what she says about that. Okay. Yeah, so Jake was out with me with some beer. Actually, there was a nice beer festival here a month ago, and we did have tokens. That's called the Barcelona Beer Festival, but don't worry, if you come around, there are more beer festivals. A question from Jax, I think the yen and the Swiss franc are on the phone figuring out a way to stop the bleeding. Yeah, I mean, it's no conspiracy theory. We know, for example, that Draghi and Yellen were talking in February. Okay, so I'm sure we also have communications between all central bankers. I'm sure they're tearing off their hair. Luckily, I don't have much hair to tear off. So anyway, I'm sure that they were a bit trying to work together. Remember, the Swiss economy is smaller, and there are many interests in the Swiss economy. The secrecy of the Swiss banking system. So if Switzerland does it, it's acceptable. If Japan does it, US politicians and everywhere begin preaching them. And of course, they preach China. So Japan has less room. It's also a much bigger economy. It's the world's third largest economy. So any intervention is much more significant. Okay. Yeah, pound bounced off at 140.50, but I feel support will be lost soon. Yeah, I totally agree. So we did have one breakdown, proved to be false, proved to be messy on pound dollar. Yeah, and that was yesterday. Now we're attempting to break down again. I'm bearish on the pound. So far, my bearishness on the pound has proved itself quite well in against the euro and the yen, but not so much against the dollar, because the dollar is also sliding. So yeah, next level of support 140, just a round number, 139.50, 138.80, and of course 138.40. Okay, another comment here, some news from Sinatra. Board member Mario Draghi event participation by the president in a meeting at the Council of the State in Lisbon, Portugal. It says participation, not a speech. Thanks for that. And Sinatra here puts a link to the ECB's website. Yeah, so we have it all here. So we heard Peter Pratt. He already spoke out. Vitor Constancio talked in Brussels at a different event. Benoit Coeur will speak also today. French member in Frankfurt. Yeah, the meeting minutes and yeah, no specific time for Draghi's speech. Anyway, quite a few have lots of members and they do spend a lot of time talking. Anyway, thanks for that. As far as I know, he is supposed to speak. He is supposed to give some statements, okay? So it's not... Do you even like Swiss cheese? Yes, I do. Not too much of it. I spent a few days in Switzerland last year, and I had fondue and raclette and whatever they call it there. It was good. Of course, not in large quantities. Anyway, a more serious question. Anyway, let's look again at charts, and I guess it's time for the wrap-up. Once again, I apologize for the technical issues we had with starting the show, 20 minutes late, accept my apologies. Apparently a restart of my computer helped, and yeah, anyway, the show, the full length of the show as usual will be available, as well as the wrap-up, okay? So this is the wrap-up for the live market open for April 7th. It's Thursday. We had basically a big sell-off of the US dollar around the meeting minutes. And most importantly, a big surge of the Japanese yen. Nobody is afraid of the Bank of Japan or the Ministry of Finance in Tokyo. And we have the yen surging across the board. Okay. Meeting minutes show that 2 wanted to hike not only Esther George, the singles voting member, she'll speak later today, but basically most of them are not in a rush. There was a clear divide between the hawks and the doves. The doves are clearly in control, and also a big divide on how they see the US economy, which is relatively positive, but their big worries are from the global economy, okay? Less emphasis on inflation. The US dollar fell before that and also afterwards. We heard that the Bank of Japan is talking about acting, but so far nobody takes them seriously. Many lines in the sand turned into quicksand. And also the ECB has a little bit of influence. Peter Pratt, member of the ECB, said that measures could be calibrated, which means we could do more. Okay, so today we have a light morning, then we have the ECB meeting minutes, that meeting that they introduced a huge stimulus package but said that they will not do more. Let's see how divided they are or how worried they are. US jobless claims as usual on Thursday. Somewhere after that, sometime after that, we have Mario Draghi speaking. We don't have an exact time. US consumer credit date, and more importantly, perhaps a speech by Janet Yellen at 9:30, a conference of 4 chairs of the Fed. She'll probably be dovish as usual. I think a dovish stance is priced in. Of course, given her last 2 speeches, she can only surprise by being hawkish, but that's of course unlikely. Japanese current account and a speech by Esther George close the day. And we'll of course talk about these 2 speeches tomorrow and other stuff tomorrow, and the preview for next week. Let's look a bit at the charts in this wrap up. So euro dollar got closer to the 114.60 level, which was the post crash high of last year, about a year ago, and it's retreating from these levels at the moment. So we're seeing some kind of small recovery for the US dollar. For the pound, we reached support at 140.50. 140 was already reached yesterday. It's further support. Resistance at 141.75. Dollar yen, as I said, wow, this is unbelievable. It just keeps digging lower and lower. No stopping for the yen. 108.55. 108.51 was the low. I said it wasn't the end of the story. There is now some talk that the ECB will intervene. The Bank of Japan will intervene when the pair reaches 105. That's a long way to go. So far, it's only job owning, and I think they're afraid to catch a falling knife. Canadian dollar riding on higher oil prices thanks to a draw in oil inventories. Currently 130.74, just under resistance at 130.80. Next resistance 131.70. It's becoming a bit weaker. 132.20 is stronger resistance. Support at 130. The dollar didn't break above 76.40 and now sliding back to the downside. Aussie dollar is not the strongest at the moment. I did enjoy the US dollar's weakness yesterday, and the Kiwi dollar that's actually looks a bit better. It climbed above 68.20. Now it's about to fall back down. We're seeing some kind of US dollar recovery. Okay, so I think we covered everything in this wrap up. Exciting days in markets, especially if you're trading the yen. Maybe just before we go, just show you this chart of a pound yen extending it the fall. Okay, quite a big crash. It traded, held up nicely above the previous support line of 156.10. 154.66, and boom, it crashed. All right, so that's certainly a big mover, the dragon, the Gepi. All right, so that's it for today. Once again, I apologize for the late start. Try to, well, I don't know exactly what to do to mitigate this, but do my best that it will not happen again. Thank you, everybody, for the big patience and for coming. You can, of course, see the recording of the show and the wrap-up on fx3.com. So I wish everybody a safe and successful trading day in markets. And see you tomorrow. As usual, on Friday, we'll do a preview for the next week's events. Yeah, thank you very much, Adinda, for helping out, trying to find a solution. Yeah, thank you very much. And yeah, so see you tomorrow. Thank you and bye-bye.